Ladies and gentlemen, I bring you Julian Fahrer, the Bitcoin accelerationist, co-founder and CEO of ApolloSats. Massive signal today, diving into the Bitcoin ETFs, Trump and Bitcoin, as well as Germany's recent blunder and rumors about mainland China saying the Bitcoin ban is to be reversed. Welcome to the show, Julian. How are you this morning?
Great. Thanks, Sean. Yeah, it's awesome to be here. Super excited.
Such a pleasure, Julian. On your website, it shows the US Bitcoin ETF flows. We've seen billions enter the market since BlackRock and the Nine launched back in January 11th, 2024, the start of the year. This year, we've had a long time with very little inflows, outflows. Then just last week, Wall Street starts buying over $1 billion worth of Bitcoin. Do you think the trend will continue? Will it accelerate? What's going on with Wall Street and Bitcoin ETFs at the minute?
Yeah, so I definitely think it's going to continue. We've been kind of predicting what we're calling second wave summer. Is going to be coming for a while, and I think as you said, we've had a bit of a lull period after that first wave of March, April, where there was a big run up, not only in Bitcoin ETF flows, but of course Bitcoin price as well. Then we had that cooling off period in the middle, several months of either sideways chop and a little bit of a decline recently. But we do see things accelerating now for many reasons, not just obviously because of the Bitcoin ETFs. But I think the market sentiment is turning for several reasons, whether it's political changes and encouraging developments in the US presidential race, a few legs of, I guess, the FUD stool being knocked out from under the bears, Germany being one and Mt. Gox and some of these other things which probably spooked the market a little bit, definitely have spooked the market over the past couple of weeks. Of course, my view is that these things are temporary distractions, and I think the market is starting to figure out that now. So, as the market, in a general sense, kind of turns a corner, which I can't guarantee it, but the trend seems to be in that direction. Expect everything to go up, including, of course, ETF flows.
Yep. Just this morning, the day that we're filming this is the 16th of July, 2024. Larry Fink this morning came out with a video talking with Jim Cramer, really putting out some high signal there. He got a couple of things wrong, that Bitcoin's not hope. People use it when they're scared. I think the rest of his talking points were pretty good. And then we also had Jerome Powell saying that inflation, it's around the 2%, but they may look at starting to cut rates before it hits that 2% because they need to front run it going below there. Do these things coming in, Larry Fink coming back online, because he was quiet, he sort of went on that road show at the start and really started talking about Bitcoin, then we didn't hear anything from him. He's come back. Jerome Powell's signaling interest rate cuts. The market's priced in September 90% chance. How do all these things come together for sort of like Q4 of 2024?
Well, the short answer is it's going to be a massive accelerant, right? What Bitcoin is a fire for which global liquidity is the ultimate fuel, and as I guess liquidity in a general sense rises, whether that's M2 money supply, a kind of overall market sentiment shift, perhaps away from some uncertainty around recession fears and that kind of thing, then I think Bitcoin is kind of primed to benefit like nothing else will. I haven't read or watched Jerome Powell's comments specifically. I would imagine that he probably was hedging pretty hard as he usually does. I think some of what he said recently is that obviously, there is a risk to, I think last week he kind of said, look, there's a risk to cutting too soon and there's a risk to cutting too late. I'm not going to tell you which, I'm not going to tell you which one is a bigger risk right now, essentially. So, but as you said, the market is now pricing in rate cuts for September at 90%. I think.
A quick message about today's sponsor, the Bitcoin Way. If you still have your Bitcoin on an exchange or you're using a hardware wallet that's not air gapped, it's not open source, reach out to the Bitcoin Way. First 30 minutes, it's free. The team has over 25 years cybersecurity experience. They can help you take your Bitcoin into self-custody. Safety Moose, the author of the Bitcoin Standard, endorses this team. They'll never touch your keys or your coins, but they'll empower you to become self-sovereign. They can teach you how to run a node, can assist with multi-sig, cybersecurity, inheritance planning, running VPNs, and so much more. And the team, they can even help you obtain a second passport. Bitcoin, it's generational wealth. Learn the skills today. I've put a link at the top of the description. And again, the first 30 minutes is free.
They've held on longer than everybody thought that they would. So, if Jerome Powell wanted to be able to say that, yes, I stuck to my guns and we implemented the higher for longer program, I think he could plausibly cut in September and still kind of say with a straight face that that's what the Fed accomplished. And then we're off to the races.
Yeah. And what do you think is going to happen? Are we going to see like another $1 billion of inflows come back into the space as the FTX bankruptcy as well? I think that's $16 billion that'll be paid out in cash. A lot of that will go to the degenerate traders going into the altcoins. Maybe some of them have learned their lesson. They'll put it into Bitcoin, or are they just going to be like, no, I've had enough. I don't care. And Wall Street, maybe they put money in. The FTX customers don't put money in. How do you sort of see that playing out?
It's a great question. I think in some sense, what that question gets to is what is the landscape going to be like of this cycle as we kind of survey. This is how I think about it. As we kind of survey all of the assets in this space, and I guess for the purposes of this conversation, we can say that Bitcoin is in the same space as some of these other things. I think that the last cycle was an altcoin dominated cycle, really. Not dominated, but proportionately, like the performance of altcoins versus Bitcoin was, I would say, outsized. And I think that cycle will be an outlier for that reason. For several reasons, but probably the main one is, there are only so many different use cases that you can go to market with, and then strike out with those use cases right before you run out. Last cycle there were a number of different altcoins purporting to, call them utility coins or utility chains, purporting to, offer various kinds of utility, right? To do actual things for actual users. And apart from maybe some niche DeFi cases, stablecoins, obviously, a lot of those things haven't panned out, right? This time around, I think, while we still are early in the cycle, I just don't see. What I do see is the well kind of running dry for these kind of fresh narratives that you can, mint a coin and go to market with, right? And so, whereas last cycle there was kind of a broad distribution, Bitcoin as the kind of premier blue chip sovereign store of value, then maybe some competition from Ethereum for liquidity, which, by the way, I think is gone now. But it was kind of competition with Ethereum and maybe a couple of others last cycle. Then you had a variety of exotic alleged utility coins and chains, and then you had all the NFT stuff too. There was a real distribution of at least alleged different applications. This time, it seems to be, again, it's an early call, but it seems to be much more of a barbell between, you got Bitcoin, we'll say you've got your blue chip assets, of which it's really, Bitcoin is the main one. That's at one end of the barbell, and at the other end, you've got meme coins, right? And people have really given up, it seems like, on a lot of the stuff in the middle, to me. This is kind of my reading of the sentiment. So what does that mean for I guess Q4 and beyond? I think BTC dominance, my guess, would be higher throughout this cycle and at the peak than it was last time. But of course, you should also expect for other assets which, for which the potential for, I guess in putting yourself in the shoes of the types of investors that are going to be attracted to this stuff, where the potential for massive gains is there in a way that perhaps it's not with Bitcoin over a 6-month time horizon. A lot of that stuff, we're talking about meme coins, right? Meme coins and equivalent, and basically everything is a meme coin that's not Bitcoin right now. So there will be some rotation into those alternative investments as there have been in prior cycles, but overall, I think Bitcoin is going to dominate harder than 2020 through 22.
Yep. I wanted to dive into a little bit of your backstory. It's really fascinating. But for yourself, Julian, are you going to do that? Bitcoin pumps, you're going to pull out a bit of liquidity, throw it into the meme coins, let that pump, and then put it back into Bitcoin. What's your game plan?
No, look, I'm not going to give financial advice or probably not that relevant, whatever happens with my portfolio. But I'm personally not interested in anything else other than Bitcoin. That's what I invest in. That's what I think about. That's what I work on. There are lots of different reasons for being a maxi, and perhaps there might even be different types of maxis, right? I would consider myself a maxi by most definitions. I don't invest in other things, so that's probably the most important definition, right?
Yeah.
But honestly, the reason why I never invested in anything else to begin with, back when I didn't know anything about Bitcoin, is because I just don't trust myself to actually win. Right? It's like going down to the casino and playing a bunch of different games and thinking that you're going to come out ahead, right? Whereas in actual fact, the house is, you play long enough and the house is going to win. And in this case, you're not just playing against the house, you're playing against people with real information that you don't have, and you're playing against them. So that's it's always been my view about things that are not Bitcoin. I like winning. I like making money, and I don't like losing money. And most people tend to lose money on that stuff. So.
100%. I think the analogy with the casino is pretty good. The house will always win. Maybe some people get lucky and it's all gravy, but for 99% of people, they're probably just better to buy a stack and chill with Bitcoin. Julian, co-founder, CEO of ApolloSats, got into Bitcoin 2019. Fascinating story with Sequoia selling a recruitment company to Sequoia. So maybe start off with that, with what happened with Sequoia in Silicon Valley. You're building out a company, if you can expand on that. And then you past 2019, starting to study Bitcoin, middle of the bear market, and then where you are now with ApolloSats.
Sure, yeah. So quick bio on me is I'm Australian and moved over to the States to San Francisco in 2017 to kind of get into tech, and ended up starting a company about a year after that because what I found was, I didn't know a lot about tech when I arrived, and I didn't learn that much in kind of the year 18 months after arriving. What I did see was there was a super hot market in startups and tech. A lot of companies being started, a lot of companies getting funded, and what happens in a really hot market like that is there's a massive war for talent. And then one of the most important resources just becomes the talent that you have and the people that you can hire and bring into your company. And that it was something that a lot of companies that I saw or just kind of knew about in the market were kind of struggling with. So started a little recruitment company with a friend of mine to help with that problem, to help early stage companies generate a bunch more talent pipeline, hire lots of engineers and other great people, and particularly at that early stage of company formation where your resources are spread so thin over everything else. If you are a co-founder or CEO, you want to be spending your time building the product, talking to customers, doing all these other things, and somehow fitting in a bunch of recruiting too. It's just really hard to do. So that's who we set out to work with. The whole experience was fairly short. Within a year of starting that company, we had worked with a number of great startups, including several that were portfolio companies of Sequoia Capital, which is a big venture capital firm in Silicon Valley. And the long story short is they ended up acquiring our company Automately to kind of bring it in-house at the firm. And we joined the kind of in-house talent team, and then ended up spending a couple of years working with a number of Sequoia portfolio companies and doing other cool things.
Man, that's really cool. It's such a unique thing. Like, out of all the people on planet Earth, very few people are going to go through that experience of being acquired by a venture capitalist firm. You said it was pretty wild. It happened pretty quickly. Like, how was that experience for yourself? I haven't been through anything like that. Like, was it like a roller coaster ride? Was it all ups? Was there ups and downs? Did it feel like you're so close to the edge and then something would happen and you'd need to like hit the ground running again and climb back up that ladder? Or like, what was that whole process like?
Yeah. In hindsight, I think the overriding feeling that I have is that I was so naive throughout the whole thing. I really, and that probably helped in a way, because when you don't know what you don't know, there's kind of a boldness that can come with that, where you kind of don't know enough to doubt yourself, maybe. But really, it was a kind of fortuitous set of circumstances that just aligned really well. In other words, timing. We had some close relationships at the firm. There was a need on their side. They were looking at that time to invest a lot more into talent, and they wanted to bring in a kind of either it was like a build or buy. It's what's called a build or buy type acquisition, where you could go either way. Are we going to build this in house? Are we going to go and find some other team somewhere to bring in and do it? And in our case, they opted for the latter. But yeah, I guess to your question, it was was a roller coaster. For sure, it was a roller coaster. I mean, we were a bootstrapped company. We didn't have venture funding of our own. It's not something I've really spoken about publicly a lot before, but like, we have a lot of gas left in the tank when we were acquired either. So as we were having some success, but beyond 3 to 6 months out, we may well not have. We may well not have succeeded at all. So, so the timing was great. It was just the right fit at the right time, and kind of a magical set of circumstances.
And then you got into Bitcoin. So what was that story from one thing that was magical, the tech side, Silicon Valley, and then coming into the world's hardest digital money, hardest money that's ever existed, came here in the middle of the bear market. What's your journey been like? And then co-founding ApolloSats.
Yeah. So I'd known about Bitcoin for several years. In fact,
do you remember the price when you first heard about it?
I remember the year. It was 2014. So in the hundreds or maybe low thousands would have been my guess. But the reason I knew of Bitcoin is not through any credit to myself, but my brother and actually now co-founder Tom. He had studied it at university. He'd written a thesis on it.
Well,
like a master's thesis on Bitcoin, kind of doing some price and modeling stuff in what I think was 2014. So we talked about it a bit then, and I knew it existed. But of course, like so many other people, didn't pull the trigger from a personal investment point of view at the time. But anyway, it was on my radar. And then, in fact, when I moved to the States I moved to San Francisco in 2017, right? Actually, it was kind of the middle of the year. So it was right as the bull run was like starting. And, SF at the time was like something of a hub for it. A lot of my friends in tech were, making and losing fortunes in crypto, over that few months. And and again, I didn't really know what was going on, but I knew there was some like crazy stuff going on. In fact, one of the jobs that I interviewed for when I first got to the country was a job at Coinbase, funnily enough. And I knew nothing about it. Didn't get the job. And sometimes I think about if I'd had gotten that job and stuck around, I'd be probably a lot wealthier than I am right now. Nonetheless, that was another touch point too. And so, again, not a ton of conviction building, but a few points. By the time 2019 came around, I could kind of pick my head up from the startup thing, had a bit more time to think about life in general, had a little bit of money, and thought now would be a good time to start investing in Bitcoin. So got my feet wet there. And then really the rabbit hole moment, or the rabbit hole period of time was 2020, as it was for so many people. And it was obviously the onset of COVID, the lockdowns, but then the response of not only the US government, but governments around the world, which was to print trillions of dollars. Not only, so that affected Bitcoin's price eventually, but it was that whole, the political environment, the not just the politics, but the kind of volatile cultural shifts that were happening at the time, and everything else. Having a lot of time on my hands too, being inside in a 1-bedroom apartment in San Francisco for COVID lockdowns. You have a lot of time to sit around and think, and you have a lot of time to sit around and listen to Michael Saylor podcasts. And so that's what I did a fair bit of, and went down the rabbit hole pretty hard. So from there, it didn't take long for me to, kind of go all in various senses and decide that that I wanted to work in the industry in some way. I wanted to contribute to Bitcoin in some way. And I'm not an engineer myself. I'm what the folks in Silicon Valley call a non-technical person. but nonetheless, I wanted to find a way to contribute, and ended up suspecting that the best way to do that would be to start a company. And that kind of led to start of 2022, where that started to happen.
Yeah. We'll dive into Apollo and what you're doing there. Do you have any idea like how many hours it was before you made that decision of, hey, I need to contribute something to Bitcoin? Like I strongly believe someone puts in 10 hours, they'll pretty quickly put in 100 hours, but they have to put in that initial 10 hours to get to the 100 hours. If they fall short, 50-50 chance, they just don't do anything. If they can get to 10 hours, they will do the 100. Do you know what mark it was? Like you'd put in the 100 hours of study, of research, and then you're like, at that moment, hey, I need to give back to Bitcoin. Was it longer than that? Was it shorter than that? Do you have any idea?
I think it was fairly. It was I guess a long way down the rabbit hole, I would say. It was probably less to do with what level my conviction had reached, and more kind of a combination of, life circumstances and thinking about, what I wanted to do with my career, and some timing questions around that too. But it would have been certainly mid 2021. And I think, and this goes a little bit to why I decided to, leave my former job and do something of my own. It was the nature of the market, the nature of that bull run, particularly the kind of the first half of it through April through, June or whatever it was when it ended in 2021. Seeing how that unfolded, and also seeing what I thought was an unfortunate focus of institutions who should have known better at that time to make what I saw as bad bets, ill-advised bets on crypto companies that I thought were not only were they bad bets, but I thought they were in some instances just bad companies, right? In other words, I was like a budding Bitcoin maxi, and I was kind of like tilted that all these, VCs and other people were just investing in a bunch of junk. And And at that time, the environment, particularly for startup funding, was such that there was a lot of, like it was the NFT boom. It was like there was some like Twitter, everyone was starting a Twitter clone and throwing a token on it. And it was like, it was just a bunch of noise. And so I thought like what I wanted to do was go and find my tribe in some sense. And I knew that it wasn't quite where I was. So I was going to have to kind of branch out and go and find where the Bitcoiners were. And that, it probably meant striking out on my own as well.
Yep. And so then I guess Apollo.com was born. Discover trust Bitcoin products, over 5,000 reviews you can rely on. What is Apollo.com? What is, like, I see it as a gift to the Bitcoin community, but what are you trying to build out here, Julian?
So when we started the company, we kind of went through a process of thinking about what was the most important problem to work on, most important Bitcoin problem to work on. And at that point in time, we really honed in on the idea of adoption and mass adoption, and wanted to make a dent there somehow. And what we discovered through a process of talking to a bunch of people, running some town halls, doing a bunch of user research, was that there was a kind of a startling lack of understanding or trust in the applications and companies in the ecosystem. Like the way that people interface with the ecosystem is through applications and products. And people either didn't know about them, they didn't trust them, and they didn't have anywhere good to go and get that information about them either. And we had this idea that in a mature ecosystem, any mature industry, there are platforms that aggregate products, that aggregate information about products and services, help people to discover products and services, and to do so in a somewhat verifiable, trustworthy manner. Whether it's if you're looking for restaurants in the US, you might go to Yelp, or once upon a time you may have, or TripAdvisor if you're going on a holiday, or there are like so many of these kind of discovery platforms where you can go and if you're looking to buy something in it, basically you can go and read some reviews and can put products side by side and just compare them. And so the thesis was, hey, like if millions more people start pouring into this ecosystem, they are not only going to want to just buy Bitcoin, but they're going to want to do other things too. And there's an emerging ecosystem of products and services that are going to help people with different parts of that journey, and that people need to find the good ones. And they also need to avoid the not so good ones, right? Because there was particularly and still is and a kind of a unfortunate overlap between Bitcoin and then variety of less trustworthy non-Bitcoin things. There are some less than reputable places that people buy and store Bitcoin, for example. And so we thought that what we needed to do was help people, like I said, find the good products, trust them, and then make the right decisions. So that was the genesis of Apollo. And we also thought, hey, what could be a good way to kind of bootstrap this meeting place of people, right? Where we have people who like want to buy things, want to try Bitcoin products. We have maybe the people who have had that experience, who know the thing, who have that information, and then we have the companies as well. And so let's build this meeting place between the three sides of this marketplace. And how can we bootstrap that and get it off the ground? And that maybe actually Bitcoin payments was the way to do that. So we kind of baked Sats payments into the system and tried to incentivize people to write great reviews by getting rewarded with some Sats for doing that too. So all of this is kind of the origin story of Apollo. but that's been, that's really been a kind of a 2-year project now. And while we're still, very excited about that for the long term, and I think, like I said, a mature ecosystem with a flourishing array of different products and services in different categories, it's going to have this. The question now is, on what time horizon does that happen? Are we going to see a lot more development when it comes to payment solutions, custody solutions, financial products and services, on-ramps, off-ramps, all that kind of stuff? The pace of development there, the ecosystem, it probably hasn't been as fast as I would have loved to see myself over the past 2 years. But, we've been in a bear market. And there have also been some other challenges too. It's tough for light companies in America and therefore in general right now. So still some hurdles to get over, I think, when it comes to the maturation of the product and service ecosystem. But we'll get there.
Yep. Mate, I could not in general be bothered leaving a review. If I get something, I use it, that's great. But I have used Apollo to leave reviews as well, because I think with Bitcoin, we do need to be careful of the products that are coming out, but like a true hardcore Bitcoin maxi, they are going to offer a product that has value. And this is a new ecosystem. There are things to learn. Bitcoiners, I think, need to take the time to be like, hey, this is good value, or hey, this isn't good value, and let people know, because we don't know what we don't know, like you were saying before. And it doesn't take long. You can do it. You can send that signal and it'll keep going. You're also doing another thing with flow state, total switch gears. Apollo, heyapollo.com is really good. Link in the description. Check it out. Use it, ladies and gentlemen. It's a tool that's there. It's only going to continue to grow. But flow state, what are you doing there? It's absolutely epic. I've been reading a bit of it lately. It's awesome. It's exactly the way that I like my information presented.
Oh, cheers. Yeah. Well, thanks. So Flow State, so what is it? It's a daily newsletter that we kind of cooked up on the side at Apollo, that covers, ETF flows and data, and really kind of news data and, related to, I guess, more institutional adoption of Bitcoin and digital assets, maybe in a more general sense. The reason that we started doing that was back in January, or kind of December, January, when there was a bit of positive BTC price action, but again, we were kind of deeper in the bear market than we are today, certainly. And we were kind of sitting around and thinking like, well, what's going to be the story of this cycle? Every cycle is different. Every cycle has different catalysts. And so we were sitting around and thinking, well, what's going to be the story of this one? What's going to really kick things off? And at that time, the discussions around the approval of ETFs were gathering steam. And it's not something that I had paid a ton of attention to before, but that was changing. So the conversations were picking up around ETFs. It was looking more and more likely that they were going to be approved. And then I guess the penny kind of dropped for us, and for myself, where I just thought, well, hey, like, we're thinking about Bitcoin adoption all the time. And we're always thinking about how are the next several million people going to come into this ecosystem. And so often what we were either hearing or observing was that, and I had so many conversations with friends where, you try and orange pill them and you get them all the way. And then it comes time to like signing up to an exchange or taking custody or something, and it's just too hard and they just put it on the back burner. And so there was, I just thought like there's friction there that that one day will be solved because the user experience will improve. But right now there is like onboarding friction. People are interested in Bitcoin. They want to get exposure to the price action, but they can't quite get over the hump. And that's what ETFs are designed to do. They're designed to basically be the smoothest possible onboarding experience for casual investors to get exposure to whatever the underlying asset is, whether it's a basket of stocks or commodities or what. Now, obviously, I wasn't the first person to say that ETFs would be a big deal for Bitcoin. But we took a punt and we thought, like, this is probably going to be a big deal. There's definitely going to be a lot of attention on it. There's a really good chance that it could bring in a lot of capital to the Bitcoin ecosystem. And Bitcoiners are also kind of starved for a bit of like bullish chat around what's going on in the ecosystem. And so what we decided to do was pay close attention to the launch, and in particular, the tracking what happened afterwards, tracking what happened with the flows across the kind of new 9 spot ETFs and GBTC. And we just started doing that and posting about it. Got a lot of traction. People seem to be really interested in it on Twitter in particular. And not only were people interested on Twitter, but the price started moving too. Not just the price moving, but really serious people, serious financial institutions, the Larry Finks of the world, as we can talk about, started becoming Bitcoin's biggest advocates. And it just became very clear very fast that this was going to be, if not the story of this cycle, one of the top 2 or 3. Yeah. And it kind of snowballed from there, so we thought, like, well, let's keep going with this. Not only posting about it, but what's the best way to kind of collect all the data and get it out to the market, people who are interested in it. And that's in an email newsletter. And so now that's what we have. We have a daily daily newsletter called Flow State, where we, as I said, gather all the data on ETFs, not just ETFs, but flows in a more general sense, right? What's happening on chain? Who are the big buyers and sellers? What are the miners doing? What are the big public companies who are hodlers? Kind of the blocks, MicroStrategies of the world. What are they doing? And trying to build out this, I guess, more holistic view of Bitcoin flows, where you have these different stakeholders, even within the institutional side, different sets of stakeholders, and try to capture all that, condense it down into a really digestible, fun 5-minute email in the morning.
Yep. Talking about like institutions, and I want to dive into miners, but the institutions, Wall Street, Germany dumped pretty much 50,000 coins onto the market. We've been going sideways chop solidation for a long time, James Check's words. And it sort of felt boring. Germany came in, they just, threw 50,000 coins away. They were forced to do it, understand, get all that. That's like the worst thing that they were forced to do, I think, when we look back in history. But that aside, that's when Wall Street actually stepped up to the plate to be able to bat and started again. And there's always sort of like this contention. Wall Street, are they going to be lettuce hands? Are they going to hodl? Are they going to be diamond hands? And it looks like Wall Street has come in with a vengeance to be able to stack these sats and make the most of it. Like, what's your take on all of that, Germany and Wall Street, for sort of fighting each other?
Yeah. My general take on the Germany thing is that it's probably a little bit overstated in terms of the actual selling pressure, the effect on the market. I think it was ill-timed. It came along with the Mt. Gox news. It came at the tail end of a fairly long period of chop consolidation, where the kind of on-chain signals were fairly weak anyway. So I think all of that kind of compounded together. And the market got a bit spooked. Nonetheless, okay, so what happened then on the Wall Street side? I think, to your point, there was a lot of skepticism in Q1 around ETFs. I can tell you that because I've been posting about it on Twitter every day and I've been on the receiving end of it. A lot of skepticism around, for several reasons, right? Who are these buyers? Are they actual hodlers? Are they just hedge funds trading? Are they lettuce hands? Are they going to, are they just degenning? General skepticism around boomers and boomer financial products as well. I wouldn't say that's been all conclusively refuted yet. But what I would say is, we've got a couple of interesting signals. One, as you alluded to, over the past 2-3 weeks, we've seen on several occasions, whether it's on a daily basis or a weekly basis, periods where BTC price has declined, and then a wave of inflows have come in through the ETFs. And by the way, we use, we can say ETFs in a collective sense. If we break it down, they've performed quite differently, ETF to ETF. But in a general sense, for sure, even with this, recent decline, which now, looking at my block clock, has been reversed to some degree, but with the decline of last week and the week before, we had a kind of a counter trade almost of ETF flows coming in. Aside from that, we've also got, in fact, as of just today, I've been looking at the kind of the filings that have been coming through with the SEC for who these holders are, right? What we saw in Q1 was looking through these what are called 13F filings, where all of these firms have to disclose how much they've bought, right? What we saw was that probably half of the capital that came in through ETFs was fully with hedge funds and investment funds that are they're not long-term hodlers, and their clients are not long-term hodlers, right? Again, that was kind of some source of some skepticism too. But what we're starting to see now is, now that we're getting some Q2 filings dribbling in, we can see the change quarter over quarter for the individual entities, right? And what's interesting is, and I wouldn't draw too many conclusions from it, but even some that I've seen today, and in fact, I posted one today from a big investment firm called IMC Chicago, they haven't sold. And in fact, they've actually been increasing their positions, right? Even through, and they would have filed last week, 2 weeks ago, a 25% drawdown from all-time high. They didn't sell, right? There was, with some of these trading firms, like IMC Chicago would be an example, they certainly altered their positions across they've made several investments across different ETFs. Some of those have gone up and down, but on a net basis, they've actually increased. Well, and that's been also, and you can see that also at several of the other 13F filings that are coming in too. What does that all say? It says that it's not a flash in the pan, that it wasn't people kind of piling in Q1 just trying to, or trade the news or trade a kind of, first wave of buying and then get out. I don't think that's happened. These firms are increasing their position sizes. And for some of them, it's quite remarkable. Like IBIT, for example. So the BlackRock ETF. Now, obviously, on a daily basis, there are inflows and outflows. And then we kind of get this net tally at the end of the day. So there are some outflows and there are inflows too. But there were no days over the past 3-4 weeks where BTC price came down a lot. 0 days where IBIT had net outflows on the day.
Wow.
Right? So all of these BlackRock investors, on a net basis, every single day, there are a bunch of 0 days, which I kind of have some questions about how you can come exactly on the mark with 0. I have questions about that. But in any case, no net outflow days for BlackRock over the past month, despite the BTC drawdown, right? So it's another very strong signal that the investors behind the scenes are, perhaps we didn't give them enough credit in general over the past few months.
Yeah, it's pretty interesting. They reference retail as dumb money. We probably reference them as that dumb money, but they are the people that have been playing the game for a very long time. New asset, it's new toy for them to be able to play with. But Bitcoin has got a 15-year history. The amount of information that's accessible to anyone on the planet, it's available to dumb money, it's available to smart money. And I think the world's just starting to wake up that since, Larry Fink started pushing that Bitcoin message, he's been pretty consistent. He's been refining it, getting clear on it, that this isn't going away. This is a real asset. It's a store of value. It's a hedge against geopolitical events. Wherever people want to get their information from, pretty much all saying the right thing if you put in enough time, that this thing is going to go up and to the right forever over time. You need to zoom out a little bit, day-to-day volatile. But it looks like Wall Street is seeing that at 50,000, 60,000, anything under 100,000, maybe anything under 200,000 is still cheap. Let's just buy this. Let's hold it forever, or let's hold it for a long time. It will be interesting. Say we get up to like 150, 250,000. If they start rebalancing the people that are buying here and they've gotten a 500% increase, that will sort of be like the next wave of FUD or speculation, I guess, in the Bitcoin community. But Julian, you're saying you're following the miners as well. What's going on with them? Because I don't think a lot of them have been that profitable as of late, starting to sell a few of their holdings. What are the miners at the moment looking like?
Yeah. So, look, I'm not a mining expert or a mining markets expert, but from what I've seen, really the story since the halving is there was this kind of sugar hit immediately after the halving in terms of mining revenue, right? From kind of ordinals and inscriptions and all that kind of stuff. It didn't last very long, a couple of weeks of that. And ever since, we've had the kind of expected post-halving realignment that has happened in every other cycle, which is, okay, revenues are down big. And there's minor pain from that. What happens when there's minor pain is that there is forced selling. And so there has been a protracted period of what we call minor capitulation over the past couple of months, where miners have been selling more Bitcoin than they have been making. Right. And again, look, I'm not far from an expert on operations of miners, but in a general sense, right? You're running a business and your revenues get chopped in half. You got to keep the lights on. Oh, okay, we've got all this BTC. We're going to have to sell it. We've got to keep the lights on. We're going to try and stay alive. That's kind of what happens. And so miners capitulate, add a lot of selling pressure to the market. What's happened over the past couple of weeks is I think there are signs of that capitulation slowing. And I think perhaps even I just saw something today or yesterday that there may be some signs that now the trend has reversed and miners may be now selling less than they are producing. But that aside, I think last week or the week before, the measure of, I think a metric called true hash rate, which anybody can kind of look up. There are some great charts on this, on whether it's Glassnode or CryptoQuant or anywhere you like. If you want to get into the detail, there's this metric called true hash rate, which is basically kind of a moving average of miner revenues divided by like a 30-day average of revenues divided by the yearly average. The details of that are less important. But basically, if you go and look up the chart, what you can show is you can see a massive drawdown post FTX. So that kind of the immediate onset of the bear market post FTX blowing up, true hash rate and everything else kind of fell through the floor. And then just last week, the week before, the kind of extent of drawdown of true hash rate this time kind of reached that level, kind of on par with the kind of peak drawdown post FTX. There's no particular reason why those two things have to be the same, but it's a kind of a general signal to show that it's been very aggressive, very protracted, the amount of miners selling over the past couple of months, and that perhaps we may have reached a bottom there and things might be starting to turn around. But you probably have to talk to the miners if you wanted a conclusive answer on that.
Yep, I'll organise to get someone on. Julian, what are you most bullish on, say, for the next 12 months? I know you'll be focusing on flow state, hey, Apollo, but where the market's going, sort of where we've come from since you got in 2019, it moves so fast when it starts moving. We've gone through a bit of sideways. And then a second question on top of that is, what book would you recommend people read? It can be Bitcoin related or not. But yeah, where are you bullish for the next 12 months?
Yeah. So, you're spot on when you said things change really quickly. And I think that's been something that I've been reflecting on a lot recently. But I haven't been in Bitcoin that long. There are people who've been around 2-3 cycles, been around since the beginning. But even with the 5 years that I've been paying attention to this space, I can see a massive change from even the last cycle to this cycle on some very important points. And the main ones for me would be, in 2021, there were half a dozen different serious attack vectors, hypothetical, and maybe into some degree actual attack vectors that Bitcoin was kind of subject to, from a geopolitical point of view, regulatory point of view, that just aren't around anymore. Like, they've been defeated. They've been, Bitcoin has risen above. It's risen above what I would say, the kind of climate and environment FUD of, 3 years ago, right? All the narratives about mining is boiling the oceans and all that kind of stuff. We can kind of, stick a fork in that one, because that's done. China, there are all these categories of FUD, right? China FUD. What's going to happen if China bans it and kicks out all the miners? Well, it's done it like 3 times now, right? So the answer is nothing's going to happen, right? What's going to happen? Is the United States going to come in and shut things down and seize things? Well, no, because half of Congress is almost explicitly pro Bitcoin at this point. The next president and the next vice president are very pro Bitcoin, pro digital assets. Larry Fink, running the biggest asset manager in the world, is second to Michael Saylor now in terms of being the world's biggest Bitcoin advocate. This thing is embedded. It's fully integrated. Some Bitcoiners will chafe at this for sure, but it's now almost fully integrated into the traditional financial system, and the trend is only going in that direction. So, okay, we can talk about other consequences of that, but one of the obvious ones is that they're not going to ban it, right?
Yeah.
This is a serious concern that people have had up until very recently. So what am I most bullish about? I'm most bullish about the fact that Bitcoin is completely mainstream now. It already is. But written in ink into the party platform of the next president of the United States, and we've got nothing on this front, I think, really to worry about. Or the risk is very, very minimized compared to where it was even 24 months ago. So I'm most bullish about mainstream acceptance, on-ramp availability, and durability, and just to anybody everywhere, all over the world. And I really think there's very little standing in the way now, very little at all.
Yeah.
Okay, that was question 1. Question 2: what book would I recommend? I would say not the most original pick, but I think more so than a pure Bitcoin book. I think everybody who is either who is a Bitcoiner, in other words, who is interested in ideas like personal sovereignty, freedom, technological transformation, mega political changes. Everybody has to read The Sovereign Individual. To me, this is my number 1 book. If you're going to be a Bitcoiner and understand not just the technology, but what does the world look like when there is a massive technological change? To me, nothing can top, I think, Sovereign Individual as something that has been written, within the last quarter of a century. So, that's a whole other conversation around the contents of the book, but that would be my number 1 recommendation.
Yeah, I 100% back you up on that. It's a must read for people. Either read it or eat bugs, ladies and gentlemen. Julian, it's been such a beautiful pleasure to be able to have you on. We'll have to get you back on the show. I'll put all your links below to your newsletter, Flow State, heyapollo.com, X as well. But thank you very much for joining us today.